at the end of the day, it's easy to hide crypto. I mean, if you want to be nefarious, you could like transfer it out of your Coinbase account and put it in a self-hosted wallet and hand that paper to your friend and say, "Oh, I don't have the crypto anymore, honey. Sorry." So there's certainly stories of crypto being, or assets or cash being hidden into crypto and obviously being transferred away. And then sometime, years down the road, it becomes back.
Welcome to a Wise Retirement Podcast. We believe the best financial advice should be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today is my co-host, Robert Swarthout, founder, CEO, portfolio manager of Teton Crypto Capital. Hey, Robert.
Good morning.
Good morning. So, let's just dive into it.
Okay.
It's there's a lot to cover today on this crypto update.
Yeah.
A new crypto ETF already.
Well, I guess a new option. So Ethereum, the ETFs, there was 8 of them that launched on July the 23rd, so a week ago today.
Yep.
And in the last week, they've had $4 billion in trading volume, so pretty respectable there.
Yep. And
kind of no surprise, the iShares or BlackRock ETF is leading the charge for inflows. They're just over 442 million. Bitwise at 265 and Fidelity at 219, then it starts to fall off. I think the other important part here is the Grayscale Ethereum Trust that converted from a trust into an ETF, much like the Bitcoin one, has seen 1.5 billion in outflows. The first day of trading, so July the 23rd, it saw 5% of its assets leave. And that's probably going to bleed pretty quickly here.
Charging like 2% or something.
2.5,
that's ridiculous.
Down to all the others are at 20 basis points, 19, 20, 21, something like that.
Yeah.
So I don't know. Grayscale also launched a Grayscale mini ETF. So with 0.9 and no fees for the beginning, I'm not quite sure why they just didn't convert the whole thing and try to keep the customers.
Probably trying to get new business in general.
But maybe. You have a reputation for just gouging.
I know, right?
I don't know. It just seemed odd.
They were original in the space and the cost structure is much higher where they started. So that has...
Well, because it wasn't ETF. It was a trust and it had to be accredited and all that stuff.
Clearly their business model doesn't allow for them to...
be competitive.
Yeah. Yeah. Either that or they're like, well, we're just going to milk this for as long as we can. And then eventually we'll convert.
Even still, I was in the Atlanta airport in late June and they were still running Bitcoin ETF ads for their Bitcoin ETF, which has like a 2% fee.
Yeah.
Like who would be buying into that?
I don't know.
Like who's the customer of that ad?
I also saw some ads that they were saying that they were one of the first in the space and they're the best quality.
Well, quality's in the eye of the beholder.
Right. So they're trying to convince people that they're the best and that's why they cost more. I don't know that's working obviously because of all the outflows. You'd be crazy not to exchange 2.5% fee for a 0.2% fee unless you had massive capital gains to worry about.
But even if you do, you would think it would
be a break even.
It would be a break even. There's a curve there. So I don't know.
So now you can choose between a gold or a Bitcoin ETF, which is like the gold of crypto. And then you can do you can add to that an Ethereum.
Yep. So
ETF.
You can start to build a bit of diversification via ETFs.
Yeah. And there was Matt Hogan was out with a big article on that from Bitwise. Matt was a big pioneer in ETF startups, but he, or ETF research, I guess. But yeah, he's basically saying 30% should be in Ethereum and you'd put 70% in Bitcoin. And actually it was like 60-30-10. The 10 was another fund that they have.
Oh, he's got to talk his book a little bit.
That buys individual companies.
Right. More of a VC vehicle.
Correct. Yeah. Well, publicly traded. Though.
Publicly traded, but VC style investment. Yeah. So, now that Ethereum's launched, I think the ETF news in crypto is going to be quiet for quite a while because the model so far has been you need to have a futures ETF that was traded via CME, and there's no other crypto that currently has that. There's been some Solana news about them having ETF. They would potentially have to go straight spot in the ETF. The SEC would have to be okay with that. I don't see that happening anytime soon. There is some speculation that XRP would be the next one that has a futures product on the CME. I don't know if it's the president or someone at the CME has publicly said, we're looking at this. I don't know. At the end of the day, I think, we need crypto regulation. I keep beating this drum every time we're on it seems. But a futures product is important, but also I'm not quite sure why you can't just have a spot. I would like to hear a clear answer.
Yeah. I'd like to see an ETF that just combines Bitcoin and Ethereum.
I would,
from a practitioner standpoint, I like to buy one that represents the market cap of both.
Right. At least, even if you think about it from a logistics standpoint of managed portfolios, taking that little bit out of it, because over time that can become more diversified as products come on. So,
well, part of the issue is that you've got a 30. So we do a 3% allocation to Bitcoin now in the most aggressive model. In that scenario, you want to add 30% of 3%. Right. Or if you have a 1% allocation to Bitcoin, but you want to add 0.3,
right.
It just becomes,
the math is tricky.
Yeah. And this really small accounts, it gets difficult to be able to execute that. So it'd be nice to have a one stop.
Yeah. Just make it someone else's problem.
Yeah. Well, they can easily do it on their end.
Right.
It'd be no different than buying like the S&P 500.
Yeah, that's right. Yep.
So yeah.
Yep. So, early days, somebody asked me recently, like, what ratio do you see these kind of volumes trading at? I think that it probably starts to follow the crypto market cap of each of them respectively. Not to say the number, but the ratio between the two of them. And, maybe it's that 70-30 that you're kind of hearing there, I think may not be too far off. So,
yeah, it makes sense to me. I don't think we're going to be seeing meme coins in a ETF or anything like that.
Well,
hopefully not.
You know what?
I would be against that.
Hopefully not. But at the end of the day, with this SEC, I could see them approving a Doge ETF just because they want to piss off everyone else that or continue to piss off everyone else that
would not be the interest of.
Well, their actions, many of them have not been in the interest of investors. So, but we digress.
Well, yeah, I would say that approving, they were really slow to approve these things for whatever reason, but Bitcoin's real, Ethereum's real,
right?
Where I just can't wrap my head around why somebody would approve.
Hey, have I told you the thinking I've come around? I'm not like a big bull when it comes to meme coins, but have I talked about how I view them, they having a place in the crypto market?
No.
So this is, I don't know, in the last 3 or 4 months, my thinking on this is buying a meme coin is much like buying a piece of pop culture. So it ends up in all these memes.
So you're saying it's art?
In some sense, it's art, right? I mean, I guess from a mental standpoint, it's art.
Yeah.
There's very little art to do with Dogecoin or anything. I mean, there's a logo, and then it kind of stops at that. But it kind of permeates other things, and you can buy into pop culture much like you might have been buying into, I don't know, the Magic Dragon cards or whatever those things were 15, 20 years ago.
Then Fortnite should go out there and launch their own coin.
Well, the SEC would like to talk to them. Under current rules, it doesn't make sense, but I can see a future where there could be a Fortnite token because within their economy, that is their game.
Yes.
It makes sense.
Right. That's how to describe it to people sometimes. Just crypto in general. It's like going to Kroger, taking your cash, buying a Fortnite gift card, and then your kids buying skins and different level, opening up things in the game. That's kind of what
it's just a one-way street right now.
It's a one-way street. Yeah. It doesn't go back. I don't think. I'm sure you get a refund, right? Maybe. I don't know.
Unlikely. Anyways. So there was a big Bitcoin conference in Nashville this last week and weekend. Bunch of big names were speaking there. I think it was Thursday or Friday. RFK Jr. was there, kind of giving his speech. He riled the crowd up with, he wants the Fed. Well, if he was president, he's going to make an executive order day one that says the Fed is going to be buying a Bitcoin on a, I believe, monthly or weekly basis. I forget his exact interval. I think 550 Bitcoin was his number until they hold 4 million Bitcoin, which would be about 20% of the supply. That's a lot.
That's a lot.
I'm not sure how I feel.
I wonder why.
Well, because again, this Bitcoin crowd is going to liken it to, well, the Fed holds gold. They also hold Bitcoin. That's their angle.
Does the Fed hold gold?
So I did a little research on this. Great question. Whether they actually have it or not, I'm not going to get into. But
I'm just saying Fort Knox used to be like a no-fly area. Now you can fly over it. So I'm assuming there's less gold.
Gold there. Yeah. So a lot of people are like, oh, the Fed's got gold. Well, the Fed, obviously it doesn't back the dollar anymore.
Right.
So the gold that the government does hold is a relic of the 1934 Gold Confiscation Act. And it's basically not doing anything. It's an asset the U.S. holds,
Correct.
but it's not actively doing anything. So to try to pin, because Senator Loomis, she was on stage talking about how has a bill that would start talking about building a Bitcoin reserve by law, and the Fed would use their excess reserves. Well, since COVID, there's not been Fed excess reserves because you don't have to hold reserves.
Right.
And then they go back to this whole gold thing and trying to pin it to that. It just seems like a bit of, well, people won't look at the details, so we can just talk about trying to be this gold rather than actually backing it up with facts. So I don't know. It's fun to read. I can't imagine it's executed in this way. So RFK was 4 million. Yeah. Trump wants 1 million Bitcoin. That was his big announcement.
Yeah.
And he also said stuff like, "Oh, I'm on day one, I'll fire Gary Gensler," and the crowd was excited. And I think it shocked Trump. At least that's the way his face looked like. And then he said it again. Like he kind of went back. I mean, he's going to play the crowd for sure, but it's it was, I didn't follow the whole conference, but I followed those headliners.
What's the purpose of having a Bitcoin reserve if you're the U.S. government?
It's a great question. I think that
because part of me feels like we're not sure about this dollar thing, so we're gonna have this other currency over here.
Well, I mean, you could make the case that for the Fed to be buying Bitcoin, that I don't know. You pick RFK's number, pick Trump's number. I don't care. There's a lot of Bitcoin. Those dollars have got to come from somewhere.
Right.
Is that further devaluing the dollar to buy Bitcoin? That's what it seems like to me. I'm not going to pretend that I know enough here to know yes or no to that.
I mean, technically, you can make up the dollars, right?
Right. So that's devaluing the dollar to go buy Bitcoin to try to back the dollar.
Theoretically, you're loaning more money to then go buy Bitcoin. Well, the senator's plan was reserve, or excess, which we don't have excess. We have a deficit every year. So yeah, but they already own 210,000 Bitcoin through
that was through this
compensation.
Yeah. So Trump said he would never move the Bitcoin. That was one of the things one of his talking points.
Right.
And literally the next day, I assume the FBI has custody of that. I don't know which branch does, or which 3-letter agency does, but the next day it was moved to a different wallet. I'm like these people
trolling them.
Right. I'm like, you want to see an uprising. Imagine if that stuff gets transferred to Coinbase or something like that. They start liquidate it. Because normally the U.S. doesn't put it through an exchange. What they'll do is they will, when they've sold in the past, they will do it through an auction and do a big block.
Well, that was part of the price decline for Bitcoin several weeks ago, was that when they realized they had it, they assumed that they were going to sell it and it would drive the price down.
Well, that in Germany sold
1% of Bitcoin.
That is currently 1%. Yeah. Well, it's actually more than 1%, but total 1%. Germany recently sold some Bitcoin, like 50,000 2 or 3 weeks ago.
Yeah.
I don't know whether any of this happens. What I find just totally surprising to myself is a year ago, if you'd have told me that Trump or whoever the Republican candidate would be at the Bitcoin conference talking about, I would have not a chance.
Right.
We have in some ways come so far. Well, we actually, and they obviously have 2 candidates with RFK there. There was rumor that Kamala had asked to come, and they didn't accept her because the Biden administration has been so anti-crypto.
Yeah.
And there's talks that she is trying to have roundtables and stuff. She's trying to get votes. Admittedly, that is what this is about. I've seen many people say, "I will sit down," that have been asked to be on these roundtables. They'll say, "I will sit down with you, but first you need to fire Gensler, and second you need to officially stop choke point 2.0, which is basically cutting crypto off from the banking system."
Yeah.
And obviously she hasn't followed through on that. Will she? I don't know. At this point, I think it's just pure pandering. And we'll see.
Are you curious why annuities keep coming up as a potential investment option? People are often told that annuities can effectively mitigate investment risks and help secure their financial future. However, annuities often benefit the salesperson and might not be the best choice for you as a consumer. To learn more about the various types of annuities, the negatives of owning them, and better investment alternatives, we have a free ebook on our website just for you. To download our ebook, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity? Simply click the link in the episode notes or visit wiserinvestor.com/guides. Now let's get back to the episode.
I mean, obviously having something like a Bitcoin out there, alive, growing, thriving, that's a threat that could be a threat to a government, because you're essentially able to come off of the US dollar grid and you could operate somewhere else. And that's the whole purpose of Bitcoin. It was created in 2008 after we lost faith in our government's ability to manage resources. Right.
Yeah. There's certainly the angle of people that were like, oh, it allows me to be outside the dollar system. And I think that is good for countries that are not the US. I think that's more of a thought. I agree. Yeah. I think here at home, it's a talking point. It's not something I spend tons of time thinking about.
No.
If we're in that world, we got other problems.
That's true. It's much less of a threat to the US than it would be to a third world country.
Right. Yeah. And, look what's happened in Venezuela, right? I mean, their elections, their financial system is probably already a wreck, but it's probably even crazier right now.
Crazy inflation.
Having a dollar, some kind of crypto down there probably is pretty valuable at this point.
Yeah. Isn't it illegal? I have to look that up.
I know in some countries, I don't know about Venezuela, maybe. Yeah. I know certainly in Iran and other places it is. So,
speaking of that conference, this kind of came out about the same time. So they launched the Ethereum ETF last week,
a week ago today,
and my morning exchange, I get an email from ETF.com. Mostly it's about ETFs and what happens in the ETF world, right? So I thought this was interesting. So they're trying to gauge, these reporters, they try to gauge how advisors are thinking, and so they interviewed this guy in Midland, Michigan. And it says, basically, hey, what do you think about this new ETF that's launching for Ethereum and Bitcoin in general? And his response was, quote, "We don't do crypto, gold, silver, or commemorative coins, and we also don't buy velvet Elvis paintings. Our clients look to us to be fiduciaries of their money, not gamblers that take chances on theoretical currencies that may or may not be the real thing." So I read that comment and I was like, I remember in 2004 when I decided that portfolios could be built with using all ETFs. People listening today, if you think about an ETF, buying the S&P 500 or whatever it is that you buy through an ETF, it's commonplace.
Right.
It's no big deal. Right.
It's standard practice.
Yeah. It's what you do. And that's how you buy a diversified basket of securities, right? Well, when I started that in 2004, there were people who talked just like this about ETFs. It's really easy to get complacent as a financial advisor. For most firms, they don't do real financial planning. Right. So they're not really ever on top of what's happening on the financial planning world. But then they manage assets using their same old mutual funds, which I guarantee you this guy is doing.
Based upon his sentiment, it would seem so. Yeah.
And they collect a fee, and that's it. They just get this recurring fee to babysit your money. And so what happens when something new comes out, it forces them to use brain power to go figure it out. And so in 2004, people said, oh, ETFs are bad. They're derivatives. They're options of stock. You don't really own anything.
Right.
And there's a 1944 Act ETF. There's a 1933 Act ETF. And you don't want to own the ETF that doesn't own anything. But there's very few of those compared to real ETFs. You just got to do your homework and understand the differences. So we were blogging about this 2004, 5, 6, 7, 8, 9, 10. And we would have other advisors come to our blog and make comments of like, this is not real investing. You're going to lose all your clients' money. And you're just like, are you not reading and understanding this? So I read that and I just kind of smirked as like, first of all, fiduciary standard has nothing to do with buying Elvis paintings, gold, silver, and it has nothing to do with that.
Right.
Fiduciary standard means that there's no conflict of interest.
Right.
So I would say that he has a conflict of interest because he's probably charging an asset management fee. And if you go buy an Elvis painting, he's not getting any asset management fee. So therefore he's never going to recommend you buy an Elvis painting.
Right.
And it's a velvet one. I don't know why it has to be velvet.
Yeah. That was an interesting detail for sure.
So, you know, it's fiduciary standard just means that you have to disclose all conflicts of interest. Every advisor is going to have some form of a conflict of interest. I work really hard at my firm to make sure that we don't have one.
Right.
And that's why we have a flat retainer fee when assets get to be a certain level, because I want to say, okay, Mr. and Mrs. Client, you should probably be buying a beach property or a lake property. Maybe you put that into a rental home or vacation rental program, something like that. I don't want to be ever incentivized not to tell somebody that.
Right.
Just like I didn't want to be not incentivized to say, you know, this Bitcoin thing could be real. You should take 1% of your liquid assets and you should put that into Coinbase or wherever.
Sure.
Now we can do it through an ETF, so we can do it in-house. It's cleaner. The clients know we're watching it.
Right.
It makes more sense now. But fiduciary standard doesn't mean that you couldn't recommend someone buy gold. Someone called me up and says, I want to buy gold. I'm not going to put that in their portfolio. Gold, silver does not have any place in a portfolio. If you want to buy the actual gold,
the physicals,
and you want to put it in your safe at home, that's fine. And you want it to be, 1 to 3% of your total assets. Okay. That's great. Go do that.
Yeah.
So yeah, I just laugh at my industry because they're so slow to change. I think the average advisor age is encroaching 62 now. These guys are still in mutual fund land using ETFs. Maybe if they use a third party asset manager, and then a lot of them, majority of our industry is still transactional. So they're going to be selling annuities and all those things.
Sure.
This guy's probably not, because he's touting the fiduciary standard. Most fiduciaries aren't pushing annuities.
Yeah.
But it just, come on, man.
Yeah. My guess is he is at the average or slightly above. And he is incredibly undereducated on the topic of crypto.
And maybe his client base is like, I don't like this crypto stuff. You know what? We started offering Bitcoin in the portfolio shortly after the ETF came out. 15% of the people said yes. Half the people that said, I'm against crypto all this whole time, and I was kind of quiet. I said, we're doing this. You think that's a good idea? And I'm like, 1%? Yeah, I do. I think that this is a good idea. Oh, okay, do it. Well, they just spent 10 minutes telling me what a sham it was.
Yeah.
And I'm sheepishly in the conversation going, well, actually, we're going to do this. It's part of the future. I can't tell you exactly how it all fits in, but it's part of the future. And they go, okay, yeah, just do 1%.
Yeah. I mean, because we talked about it, the downside risk is, rather minimal. The upside is, it's an interesting, I wouldn't call it trade, but situation to be in. So
correct.
Yeah.
Hey, if it hits $1 million of Bitcoin, that 1% is going to be huge.
You're going to love me.
Exactly. Yes. If it goes to 0, which is also not likely,
right? Then
it doesn't really affect anything, because 1% of the portfolio went sideways or went down.
Right.
It all worked out. And again, some people just aren't comfortable, and that's not something that I would ever push on a client. But I think as a financial advisor, you have to understand what's happening out there. There's ETFs now that are like fixed annuities where you're guaranteed never to lose more than X, but then they cap out your gains. I have to read about all this crap, because someone's will walk in here and go, hey, I want to buy one of these ETFs that guarantees I never lose money. Right. Like, it also guarantees you'll never make money. So just keep your money in a 5% savings account. You're going to end up with more money.
Right. And you're guaranteed not to lose money.
Guaranteed.
In theory.
Yeah. And the bank goes out of business. It's FDIC insured.
Sure. Yeah.
So it's our responsibility as advisors to understand. That's why we started this podcast, over a year ago now.
Oh my gosh. Way
2
more
years?
than that.
Are we 2 years into this thing?
Probably
now?
3 years at this point.
4 years? 4 years? Good grief.
Yeah. So, time flies when you're having fun.
I know, right?
Yeah.
Anyway, so it I just laugh at my industry. Just it's funny. All right, what you got next?
We should be a quick one. So we're in the final countdown for remedies in the SEC versus Ripple case. It's basically on the judge to send her final order.
I thought this was all done.
Well, a year ago in July,
that's
when she, I guess, decided like 90% of the case, like gave her ruling. Now the remedies portion is Ripple going to pay a fine? Do they have interest to pay on the, any sort of, like, I'm forgetting the word, where you basically claw back some gains that were made. So anyways, it doesn't sound like there's going to be tons of that. The SEC is asking for $1.95 billion. Ripple came back and gave their case why it should be much smaller. They've given some other case precedents in the meantime. I'm probably going on the record that it's between 50 and 100 million that they pay, and they're happily paying it and moving on. They just want this to be over, I think.
Yeah.
And obviously that's a much smaller number than 1.5 billion. I don't think that was ever realistic. And, we're like literally like she could issue the ruling this morning. I mean, like super close to what people believe the sweet spot of the time range is. So maybe next time we chat, we'll have an update there.
Okay.
On to our next topic. So we talked in the episode or two before about SAB121. That stands for Staff Accounting Bulletin 121. That is from the SEC. That is not a law. That is the SEC's opinion on how you should handle certain situations. This was directed at banks about custodying crypto for clients. This has been in the books for about a year and a half, if I'm recalling correctly. And there's been a push over, this is July, I would say April, May. There was a push while Congress was still in session that to repeal this. It was a bit of an overreach. The Republicans always thought. The Democrats have largely been happy with it, but it passed the House and the Senate with obviously majorities. And there was even Democrats, a good number of Democrats coming across and voting for the repeal of this. It went to Biden's desk. He vetoed it. And it came back to, I believe, the Senate, I think, is who has to vote on a
don't get
veto, 2/3, and they came just shy of 2/3. So it's not going to happen. Assuming we have a different administration in January, this is one of the things I think gets cleaned up pretty quickly.
Yeah.
But the ironic thing is there was rumors for a while, and now it's been proven that the SEC has been giving exemptions to certain banks to not have to follow this rule, because the banks have proven that their operational procedures would help them not have problems with crypto. So
if crypto blew up, it wouldn't take down the banking system.
Or supposedly. Yes, I would agree it wouldn't take down the banking system, but it also probably wouldn't take down that particular bank.
Right.
And I'm sure you'd be shocked to hear that it's the likes of JP Morgan, Goldman, and those guys that are getting the exemption. Not the smaller banks that want to do this. So
I mean, as long as we've been watching this, what I've noticed is all the people who are very anti-crypto worked really hard to get rid of crypto in order to get crypto for themselves.
Yes. I mean, it's the incumbents that they always said it was going to be slowed down so they could catch up and kind of get their claws on it. And
that's
it's precisely what happened. Yes. Yeah. So anyways, I guess we're just sharing that one to kind of put a bow on that one for the time being. So, so maybe a bit of education here at the tail end of this episode. So I was listening to your podcast episode on estate planning. I think you did that with Shauna, or do you remember who you did that with?
Yeah,
that was with Shauna.
I think so.
It was a great episode. And it got me thinking that maybe we should touch a little bit on estate planning when it comes to crypto. Just kind of, because there's a little bit of nuance difference there. I think what's not in the notes, I think that it should be said, is there's an overarching that the courts really haven't dealt with crypto in a major way to kind of say how it should be handled within a divorce. I mean, yes, it is an asset, so it kind of falls in that.
And probate.
Yeah, in that kind of process. I guess probate too. I hadn't even thought about that. But at the end of the day, it's easy to hide crypto. I mean, if you want to be nefarious, you could like transfer it out of your Coinbase account and put it in a self-hosted wallet and hand that paper to your friend and say, I don't have the crypto anymore, honey. Sorry. So there's certainly stories of crypto being, or assets or cash being hidden into crypto and obviously being transferred away. And then sometime, years down the road, it becomes back.
But how does that work? Because if everything's in blockchain,
it's public, but there's the software, and admittedly, the attorneys are probably not up to speed enough to know to go look for it and know how to look for it. You're right. The paper trail is there.
Yeah.
But
the first thing I thought about was like divorces.
Right.
So if you go hide a bunch of assets, you would hide it in crypto, but that's probably, you're not really hiding in crypto.
I mean, you're stashing,
you just have to hope that the other side doesn't go looking.
I mean, you have a better chance of like buying gold bars and putting them in a jar and burying them in the backyard.
Right.
Because there's no real, I mean, at some point the paper trail disappears there.
Right.
So I don't know. There's different ways to game the system, but I think that from a positive perspective, estate planning needs to happen when it comes to crypto, and there's different ways to handle this. So we're going to kind of bucket crypto into that you hold with a third-party exchange or custodian provider like Coinbase, Uphold, Kraken, something, whatever your exchange is that you prefer. You need to figure out how those login details, and in some of them, you even have the ability to name a beneficiary of the account, much like you can for a retirement account. You can kind of put those details within those systems. And then if there's login details or whatever for that exchange, you may put that on paper. A great example is maybe you put it in a copy with an attorney in a file or a safe deposit box. I mean, there's different ways to do this, or you can put it in electronically in a password manager that the other spouse or maybe a trusted family member has access to. There's different ways to kind of custody the information. And similarly, if crypto is held in self-custody, you do the custody yourself with a software or hardware wallet. The same kind of backups need to happen because you already should be doing those because you have more risk, because if you lose it, you're out of luck.
Right.
But those passphrases, those keys that you need to unlock that software or hardware wallet should be kept in a similar manner in a safe deposit box, an attorney, potentially multiple places. So you may choose 2 or 3 of these options.
But if you have your assets at Coinbase, it's less of a risk because you just have your login for the account.
Right. And, we, in a year or 2 ago, when we were talking about crypto, we were like, take all your crypto off exchanges. Right. And there was certainly a period in crypto where if it wasn't on a US exchange, I would say even now you take it off the exchange. You do not trust anything that's outside the US because you just have no ability to, recourse to kind of go after it.
Sure.
Here domestically, I think we're slowly getting to a spot once regulations are in place. Once banks can custody crypto, or all banks can, we are maybe in a world where you likely are not going to self-custody unless you're a diehard crypto. You think the banking system's going down and all this kind of stuff. But that aside, I think that this need to custody your own crypto is slowly becoming less and less outside of for some very specific use cases. So
and if you have the ETF. That's not a big deal. It's just all controlled by however you have that account set up.
Right.
I mean, if you own Bitcoin ETFs or any ETF inside a brokerage account, you just do like a transfer on death, TOD.
Right.
And that solves it. It skips probate too.
Yes.
So
I think once we have regulations it may take 5 or 10 years for the courts to catch up to really understand how to handle crypto, because there's no place to put, unless you're with an exchange, there's no place to put your information or a recipient's information within a crypto held system. So not tons of information to share here, but just generally, like, you have to be thoughtful, just like everything else in estate planning. You have to think about it ahead of time. And crypto being newer, I could see it not being handled and specifically called out within estate planning right now.
Yeah, makes sense. All right. Well, thanks, Robert. Thanks for listening to today's episode. If you're interested in learning more about Wiser Wealth Management or want to schedule a consultation with one of our fiduciary financial advisors, you can do so by going to wiserinvestor.com. We've also linked Robert's company to Teton Crypto Capital in our show notes as well. Thanks for listening. We'll see you guys next time.